Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And it is Thursday. We're almost at the end of the week now. And the data you can see up on the screen, I think, has come out already. Let's see what it is. I haven't heard the analysis here yet. Trade balance, so it's down minus 3.44 billion. That was the Canadian trade balance. The U.S. trade balance down 68.98. Let's see just real quick what they're doing to the stock market from it. It's usually a good measurement. I guess I can say this. This is the shortest of our intraday, and so it's been a flat line before it came out. There's the 15 minutes before. In other words, they already knew it back here when it was released to the press a half hour ago, and so it slid down, and it kind of sitting down in this area, and we're making new lows. But overall, it's not the worst thing in the world. Just kind of noisy, I guess you could say. Noisy.
Why doesn't everyone get solar?
Ooh, let's kill that volume.
It's not because of lack of sunlight.
There we are. So that's where we stand on that. And oh, there you go. Hey, Robin. Hey, Janos. ADP came out almost double. Caused the move. Ooh, let's kill that volume again. There's my volume again. Too high. There we are. That's better. So, see, ADP caused the move. I was out in the field at that point working on plants. See, moved the dollar. Did it move it up or down? Or what? See, let's look at J4X. I imagine it would make the dollar go up, but because of higher interest rates. Now, I heard some interpretations of yesterday. Where's that mouse at? Oh, there it is. I heard some interpretations yesterday about the Fed minutes and so forth, and the attitude was, yes, they want to tighten, but not necessarily right now. Not now, later on. Yeah, it was forecast that the U.S. would have created 226,000 in June in jobs. Instead, ADP data shows almost 500,000 new jobs. Woo! It's election time, baby. Let's get those jobs up. This is, Biden's people are running around. The Secretary of Transportation, Secretary of the Interior, and what's the other one? Secretary of Labor, maybe? No, it wasn't Labor. It was something else. Really odd. They're going around telling people about Bidenomics. Yeah, Biden and economics. Bidenomics. They need to be schooled on it, I guess. In other words, don't worry, be happy. It's all getting better. That's pretty much what they keep on saying to everybody. Don't worry, be happy, it's all getting better. It's like, okay, sure. But why am I paying more for all this? Don't worry, be happy, it's getting better. So we'll see what that does, We see inflation hasn't gone away. We're still in the 4s and 5s, or 5 and quarter, or 5, or 4 and 15 sixteenths, right around in there. It has been cut in half. But it's unfortunately from the previous administration, it's 5 times greater now than it was before he took office. So that's a real drag. Matter of fact, the first quarter, inflation was still down around 1.5. So it's he's got a lot of work to do. It's 4 times greater right now. So get that Bidenomics working. Turn on the Bidenomics machine. All right. Where else? You can see right there. I can see the euro. I mean, not the euro. The stock market. Yeah, dropped off a little bit more, but overall came down when the news came out to the reporters and it was public. I guess because it was at 62 and it's gone down to about 48. What's the low there now? 48.75. So it's going to dance around, act like it means something. The basics. Bidenomics. I like that. Sounds like an economic policy. I like that. I see Mrs. Yellen is going to see her overlords in China. That's entertaining. So good for her. I don't know what they're going to talk to. I mean, I guess they want to know is, can we pay them faster for what we do for them? That's the only thing I can imagine, because they don't send money back this way. They send us plastic toys and so forth. So there's the dollar, 102.94. It's trying. Robin, if you're listening, it's trying. It's up about 40 points since we found out about the the 102.50 calls. Since that, I'd say, it's making money. And I imagine I don't expect a lot of excitement. Like are we going to see this thing blow to 104 again? Well, let's see what it looks like again on the charts. I think we're still in a weekly sell though. Yeah. And look at that. The fast has gone above the manifold now, but the slow can't even get up to the negative manifold, let alone even get plus. So I'm not that energized about it. If there's a profit in there, I would sell call on top of it. That's what I would do. That would be the best thing to do. I'm going to have a sip of my tea now. All right. So, from the euro, I'm sorry, not the euro, the dollar, not the dollar pairs trade, but the dollar index itself, you can see lots more green than red, so it is trying to go up, but it's kind of bouncing from like the 101.5 to the 102.5. Or, no, I'm sorry, 103s now, really. So that's good, for anybody that's long. I'm just not that excited about thinking that there's a lot of action out there, especially when the Fed minutes kind of reflected an idea of, yeah, maybe we'll do something, Yeah, that's what I'm doing. I'm watching, and I would really, really like to see the weekly get into a slow buy. We could go 2 weeks now with the fast up top. And then next thing you know, if they don't get that slow going, this thing's going to roll over again. I don't think it has anywhere to go. That's the problem. That's what the problem is. Trying to buy gamma in option derivatives at this time of the year is really, really tough. It's more you need to go binary. Buy a call, sell a call. Buy a put, sell a put. That type of thing. In other words, do spreads. Spreads. All right. From there, let's zip over to the euro and see what the euro's up to this morning. It was in a daily sell still. Last night it was, at least. There it is right there. Yeah, still that little pressure there going down. The slow is at 36.5 basically, and the fast is down at 28. So still feeling the pressure there. Let's slide over to Dukascopy on J4X, or on Chicago Quant. There it is. There you go. Yeah, kind of. That's why I keep on putting these squares in. I do it on gold. I do it on these things. I just don't think they want to get out of their own way. I think they just want to be sideways. Mischeck, how you doing? Howdy. Yeah, I just don't see anything that. I just don't see any excitement yet. And I really did. I found it was interesting with the Fed data that came out. With their opinion, what the governors and the presidents were saying inside the governorship. The Fed meeting itself. I thought that was interesting that they actually suggested, yes, we want to raise a couple more times, and we will, but we're not sure when. That was kind of like the attitude of it all. So that you would have thought would have put a little juice into the stock market yesterday, which noticed it tried, once, when you go back and we look at yesterday's stock market, which is kind of like the real directional thing. When that stuff came out, it kind of just bounced around trying to lift, but could not lift. Is that yesterday? No, there's yesterday. Yeah, see it. They knocked it down to this area, 74s, and then tried to lift it off of that idea. And then throughout the day, they just pressed it down slowly. By the close of the market, it was right around in here. It was off of the highs over in here. And the next thing you know, here we are down, taking out this low right there. So, especially as Janos said, the employment numbers. Those employment numbers do make the Fed governors and the Fed presidents of the different banks think, oh, shoot, I guess we got to do something. So it's kind of like just when they thought they were able to do political speak, or double talk. That's what we used to call it, double talk. You say one thing and say something else. Once they thought they had the double talk all set up perfectly, the numbers come on and go, oh no, inflation may be here even longer, and it's supposed to be not here at all. Remember, it's transitory, and they are right. It is transitory. Since the beginning of this administration, it's taken, inflation is going up 10 times in size, from 1 and change to 10 and change. And now it's halfway down. So they go, woo, it's going down to, it's dropped. Inflation has dropped over 50% now. Yeah, but it went up over 1,000%. So, we want it down 500%. Indeed. I need more tea. All right. Now, let's go back to the currency. And as you can see there, the euro, it's dragging slowly. What's interesting is we talked about this, and I thought, was it Mountain? Who instigated us to go check out all those? It used to be Benny, and actually take a look at the Japanese yen against the 3 major currencies. And they're considered the 3rd major currency to begin with. And then the British pound is the 4th major currency, and then Canadian dollar is the 5th, and so forth on the planet by volume. And so it goes, euro number 1, or dollar number 1, euro number 2, yen number 3, British pound number 4, Canadian dollar number 5, and then, they start to drop. Swiss is number 5. Or I guess it would be number 6, and then the kroner number 7, that type of thing. And then after that, it's just little peanuts for everything else. Let's take a look at the British pound, right? Not that one. That one. Oop, got the AUD one. There it is right there. There's British pound on J4X. And you can see it's still trying to be firm. Slow is trading at 69.5. Fast is moving at 74.5, almost 75. So, it's picking up some activity there. Same thing today. You can see they made a new 10-day high, something like that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 10-day high. 11-day high would be wild, wouldn't it? It would be this high right there. But it made a 10-day high. Now it's just at the top end of the range. In the daily buy, in the weekly buy, it's definitely. They're leaning towards the cable, that's for sure. I see Yano says, S&P 500, what is your outlook now? You mean for like the next couple weeks or couple hours or like couple months? When you say now. Just which outlook are you looking for? Like today's outlook or like the next couple weeks or say the next couple months? And we'll put it up on the screen while Giannis is clarifying what I should pontificate about. What should Doc say about this? Right there. There it is. There's the daily and the weekly. So right now the daily is tried to get into the sell yesterday and it failed at it. It's in a weekly buy for 15 weeks now. Let's move that over. See, it's been in a weekly buy all the way back in here. The fast and the slow joined in on the same week, too. This week, has something changed with the ADP? I imagine, with the ADP, I hear, that's a whole interesting conversation in its own right. And to commingle it with the answer to is, they've really gotten to a point now where they feel that the ADP is more accurate. They do. They see the ADP as more accurate than the Bureau of Labor Statistics, or BLS, the government one, because they've changed, under Mr. Obama, they changed the way they calculated it. It's almost like a stochastic. I just realized that I haven't been able to describe that for years now. Basically what it is the Bureau of Labor Statistics employment number is more like a stochastic now. So it is... And what I mean by that is it can only go to 0 or to 100. and it can't go out of the range. And so that's why I was making the jokes during the Trump years that there's a chance that it actually might go to zero. Whereas during the Obama years, the best it could do is get down in the 3.5, 4. But what they've done is they've changed it so it doesn't really. It's stuck. It's stuck in a range. They changed the way they calculate it. They have about, I don't know, like a dozen calculations, and even down to statistical, which is really crazy. But the Fed governors and the Fed presidents, especially the Fed presidents around the country, they do a statistical. They create a statistic. They talk to a lot of the businesses that move money in and out of the Federal Reserve of that region. Like the St. Louis one, or the Philadelphia, or the New York, or the Richmond. They talk to those presidents, or San Francisco's. They talk to the companies that are moving capital through the Fed system. They're big. They're so big that they move the money more through the Fed system than they do into their own bank, or they are a bank, like a Goldman Sachs, or a JP Morgan Chase, or a General Motors, or like a Ford Motor Company, or Monsanto, or companies like that, Boeing, and they go through the Fed more than they do through a bank. Okay, and so what they do is they actually take statistical information from that data, and they talk to the chief financial officer, and they might even talk to the CEO, or they'll talk to the president of the company, that type of thing, and they'll generate a concept, like an employment concept, and it'll be like an average, and it'll be a speculative what it'll be in 3 months and what it could be in 6 months. Go to like let's use Boeing as a good example. Boeing, let's say they have X amount of planes they need to build between now and say 2030, over the next 6.5 years. I know it sounds funny. 2030 is coming up, so 6.5 years from now, they have plane orders all the way up to that point, and then people have put down deposits, like $4 billion, $10 billion, whatever, they paid for a slice of it already, and then they pay for, they finally pay for it at the end, or they pay it in installments or something of that nature. So anyway, they talk to Boeing and many other companies in that same situation where they're looking down the road, and they try to figure out, okay, if you're going to build that many planes between now and 2030, how many people do you have to employ? This is where I'm getting to here. So they're like, okay, so then they come up with a statistic on that, and how many people will you have to employ, plus or minus. And so then they take that number, and what Mr. Obama did in his Bureau of Labor statistic, and they haven't changed it since, is what they did is they kind of made it like a stochastic, so it could only go to 100 or down to 0. So it couldn't go minus. So remember when, here's a good example. Remember the couple days where oil went minus or got to the edge of minus? If it had been a stochastic calculating the prices, it would have never gone to 0. It would have never gone beyond 0. But what did it do? We saw it go down to minus $34. We saw it minus $37 or $39. In other words, people were willing to pay people to take their oil contract because they didn't want to take delivery. Okay, so when you want to take delivery, people are buying the contracts, and when they're not willing to take delivery, they're selling the contracts. Well, it became an extreme. Well, the unemployment number can't do that, but ADP can. Woo! Took a long way to get to there, didn't it? This cowboy was just riding, have us heading for the sunset until we got there. So yeah, can you imagine? ADP can go minus, but BLS cannot go minus anymore. So in other words, matter of fact, it won't even let it get near minus. And so that's why people are starting to pay attention to ADP more than they pay attention to BLS. Now, does that answer that? That's got to answer the difference between the ADP and the BLS, and the effect it has on the S&P 500 is even more elongated. In other words, it's stretched out even more, and that is that they know that policy change now is almost non-existent. All right, so the House and the Senate and the president, to a great extent, have gone into summer mode. Okay, and they'll go back into business basically in September or October. Yeah, September. Just like the Supreme Court, the first week of October, they're on vacation now. It's like it's down into summer mode. So now, what happens is that when you're looking at trying to predict the direction of the S&P 500, on a week-to-week basis at this point, and you can see it there on our screen, and let's put it up on J4X too. What we're going to be seeing is a lot of summer action where it's going to be some buying, but not heavy selling. And it won't be heavy buying. It'll be nibbling more like dollar cost averaging. In other words, at the beginning of a week, at the end of a week, at the beginning of a month, at the end of the month, for the first 3 days of the beginning of the month, last 3 days at the end of the month, that type of thing. That will be the type of action we're going to be seeing. And so, that's why this is exactly the reason why I reflect on our charts a daily algorithm and a weekly algorithm. We do that for the specific reason that that's how money moves. They look at things at the first week of the month and at the last week of the month. That's 2 weeks. There's 4 weeks basically in a month. That leaves 2 weeks in the middle. And then remember Robin, when you used to fill orders on the future side, and if you had to fill futures on the S&Ps or stuff, that's why the money comes in at the beginning of the month and at the end of the month for a week. And then notice your stop loss, or not stop loss, but like your buy, your market on close or market opening orders kind of drift in at the beginning and the end of the months more than they do it throughout the month. Remember those days with the MOCs and all that stuff as we do execution? Robin was was a trader for himself, proprietary, and at the same time, he also did public orders. I was a trader, proprietary, but I started off as a public order trader, filling orders, and then left that. On the Securities Exchange side, you can't do both. On the Commodities Futures Trading Commission side, you can do both. And so that's what we call the commodities side the snake pit. Okay, so that is the answer to that, and hell, I even got a chance to say something factual and ugly about the way the execution is done to the public. I like that, but don't say it out loud to them; they'll get all excited and angry. Tea time. All right, an energy tea, herbal energy with a black tea. I do 2 different teas. I commingle tea. I create a hodgepodge. All right, so that's pretty much the answer. Now let's give you the proof on the S&Ps of what the weekly could be over the next 4 to 6 weeks. Where's it at? Where are you? There you're around here somewhere. There it is. There's the S&P 500. Let's put the weekly in there. Right there. You can see overall the product's been really, really strong. Like I said, we've been in a weekly buy now over here for 15 weeks. And you can see J4X has been the same way. It's been hot and heavy. There's 5 weeks right there. That's 7 weeks right there. They try to push into a sell 1 week and then turn around and go back into the buy for another 7, is it? 3, 4, 5, 6, 7. And this is going on the 8th week now. So there's 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 1, yeah, so it's trying to go into 16 weeks now. And it's been very healthy. I would assume, in general, I would doubt we're gonna break. I can't imagine this going down to 4,200 and breaking down there. If it does, it's going to sit around the 4190s area, something like that. More than likely, over the next couple of weeks, like the next 3 and 4 weeks, I would assume First of all, we need to get into a weekly sell even to believe in it that we're going to get some bad action. Daily sell right now is not helping it. Let's put it that way. But I would assume that they'll support themselves in the 4,350 area, something like that. That's 100 points away. So I really don't think you're going to see a lot of selling because I don't see major selling because everybody knows that we're primaries in the election primaries are not far off now. They're pretty much under 5 months away, 6 months away, something like that. In other words, some will be in January, late January. Some will be in February. Some are going to be in March. We're going to be in the heat of battle. And politicians don't like to make decisions most of the time when they have to, run for election. They would rather, they like to say platitudes like, I want to help you, them, and everybody else, or I promise you this, that, and the other thing. They don't want to sit there and pass. Some of us actually pay attention to what these people vote on. That's the most important thing of all is what they vote on. And that's so they don't want to vote right now. That's the last thing they want to do is vote. Now, when you see what the House is doing now and voting actively, it means that they're very comfortable with their policies and they feel like the population agrees with them. And the ones that don't want to vote is because they know that the population is not necessarily happy with their policies, that type of thing. And so the stock market should be kind of sideways sloppy at this point. It just should be, nibbling here, a little profit taking there, consolidation here. There's also let me go back to the ADP too and the Fed's minutes. Not necessarily the ADP, but the Fed's minutes. I guess you could say it blends with the ADP. They also said they were starting to wonder, and a lot of analysts are saying the same thing, is that they're not really comfortable with declaring that a recession is around the corner. That's another problem. In other words, before it was like, well, first of all, we had a recession 6 quarters back, 5 quarters back. We had 2 quarters of down, and they wouldn't declare it a recession to begin with. So they're not going to be really fast to declare a recession now, especially with the election coming up. Not interested. So ADP is even more insightful. When you see those numbers, that's not the sign of a recession. When you see ADP generates 490,000 new jobs, that's not exactly heading towards recession. Now that's summer employment. See, that's why they say ADP is so much more accurate than and you know what, BLS might jump into the threes. That's pretty much where it could jump into the threes going into July. When we go, not July, the July numbers in August. So it's going to be very hard because of the way they do the calculation. All right, I hope I haven't tortured everybody here. I hope I gave anybody. Do you think I talked too long on explanation, or was that okay? It's a meaty question. And you want to be accurate. Remember, we're talking about money here. The idea is to make money. All good? Thank you, Giannis. Yeah, remember, we're not here to trade. We're here to make money. And so, that's why I like to be accurate. In other words, you can go listen to my broadcast 3 years ago and find that, oh, geez, he was accurate. What is that all about? You're not supposed to be accurate. You're supposed to be friendly and funny and good, like promising rainbows and unicorns. You can go listen to my webinars 6 and 7 years ago. Same thing. You go and look and see what happened after I suggested what I was seeing, and we're right almost 9 out of 10 times. We're usually on the right target, and that's probably half the reason why Giannis and the rest of the crew there keep me. So. All right, and that's why I like doing it, because I can be that accurate. All right, from there, we were looking at what were we looking? We were looking at the cable, and the cable's looking awful damn good. And so let's jump over to the Swissy now, see what the Swiss is up to. Dollar Swiss franc pairs trade. You're here somewhere. Nothing up my sleeve. There it is. Let's get into the daily again there. Boy, you can see that this here on the weekly, it's like in a triangle. Look at it. The slow is down at 25.9 and the fast is at 25.3. I mean, they're trying to scrape the bottom in here. It's really hard. Look at that great move from the 101 down to the 88.19. What a fantastic move. You know, over 11% move, almost 12% move down. No, it's even more than that. It's like 13.9. You know, it's like, what a great move. I mean, no doubt, Credit Suisse gave some problems to the currency. And they cleaned that problem up, and they reacted. Now, what has been making the yen an interesting benchmark at this point is the way it's acting against the other majors. And it's really become an interesting thing to watch. You know, it's really giving us some guidance about what's going on in Japan and what's going on with the dollar. And it's much more insightful than just looking at one pair. When you look at three different major pairs, dollar, British pound, euro, the way they trade against the yen is really interesting. You know, it's some real, curious concepts there. You know, sometimes we see stats and numbers, and sometimes they don't really tell us exactly what's going on. We don't really know why it did it. In other words, it's not wrong. The data is not wrong. It's just that we're not sure how to read it because it hasn't happened. I had to say that because we had something happen from the Discovery spaceship, the orbiting monitor. It's like the James Webb. You know, it collects data, the Discovery. And Discovery gave us a really wild spike about 18 hours ago, but it didn't show up on other things. We thought maybe ion or something. Something hit the ship. Maybe we thought maybe that was it. It showed up in like 7 of the actually it showed up on 5 of the detectors, but it didn't show up on some of the other detectors that catch larger objects. It was just like a blast ray, and it spiked. And then it disappeared. Don't really have an explanation for it. Sometimes that happens. It's the same thing here. You know, you look at ADP. I know I'm going back to ADP now. This is what's sitting in my crazy mind. You know, you look at the ADP and it's twice the size of the BLS. You know, from 226,000, whereas ADP is 497,000. So, you know, you see that spike. We can tell you that we understand the spike in the ADP. We can also tell you we understand why the BLS is nowhere near what the ADP is. Supposedly they're supposed to be closer to each other, but they're not. They're two different statistics, pretending to be the same thing. So that's the way it goes. Anyway, I'll let you know if something's hitting Earth or not. Well, something is hitting Earth late Friday night, Saturday, but we're going to get a blast on some form. We'll see what it does. I don't think it's going to mean any. It won't blow out your TV sets or computers. I wouldn't worry about that. It's not going to be that strong. Anyhow, yeah, we monitor the sun here like Galileo. In the tradition of Galileo, we also monitor the sun's actions. We have over 500 years of history on it, and we can see what things do on the planet. All right, from there we go back to the daily of the Swiss. There it is. The Swiss is trying to get back into the daily buy. It's there for a couple of days now. You can see the slow is at 48. You can see the fast is at 52, almost 53. Over on Chicago Quant, we are right there. Look at cable. Cable's heading back closer and closer to the highs of the day. There's the Swiss. You see Swiss is in a buy for a second day, a little lower than yesterday, nothing major. You can see the weekly right there at the 0 line. The fast has made it through the 0 line, and the slow, look at that. It's the big thick green line like a manatee, just slowly, like a whale, just slowly moving along, not really caring too much. It's trying to tell us that the trend is still sideways and down. So, and you can see we've been in a daily buy since here, and it's run up, and it's run back down again, and it's running back up again. You know, it just vacillates. And that's pretty much the way I see the stock market too. S&P getting clocked, let's see. No, it's rallying. Oh, I see. It was getting clocked. Yeah, got down to what 40. Made a low now of what 42.25. 42.25, 42.20. Yeah, a lot of 42.25s. Yeah, and then let's widen that out for you so you can see that 42.25 seems to be a very strong area there, doesn't it? And it came off of that and took it back up to 48 now. You see, we went into the buy right here. Remember, we on the short-term intraday, we don't pay attention. The only thing the dots tell us is if there's action coming. And when you see red and green and red, 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 and green and red, you see these. That tells you some action is coming, just like you saw here. Then you get the nice spike there. And in this case here, it went into the buy right. Was it there? Well, definitely went into the buy on that volatility signal. And it has run from the 43.5 to the 48. Yeah, to the 48. So this is a very, very short term one. This is it's a triple. It's a 0.78 Tesla. Is that what it is? No. Let me rephrase it. Tesla is 396. That's what a Tesla is. 396. Okay. So this is 900 and something. So it's the 82. That's what it is. It's a 0.78. This is 963. Okay, so this is the 0.78 of a times 1.78. 1.78. I multiply it 3 times, no matter how you count it, and then subtract it off once. That's what I do. Like sometimes I can't get the math out of my head, out of my mouth. So what we do is we multiply it 3 times, and then take the 0.78 of that. That's what it is. There we go. All right, so you can see here it's just holding up, just dipping around. I again, consolidation. Will we see 4,350? Maybe. I don't know. I kind of doubt it. If it does, there'll be buyers, big buyers in that area. No doubt about it. There'll be big buyers. Yeah. Yeah, that's the ticket. Big buyers. Yes, indeed. Alrighty, what else could we got to say about that? Trying to think, what else can we say? No, that's it. That's the S&Ps. We were looking at Swiss. Now let's go from Swiss to that almighty yen. Let's see what the yen is doing. What's this? New Hampshire rejects DNC's primary shakeup. They've taken Biden off the prime. He's not going to be able to run in the primary in New Hampshire. Wow, that's going to be fun. That means tea time. I got to have some tea for that. So it has to be like a write-in. They have to write them in. All right. Tea time is over and back to the yen. Wow, that's a wild headline. Let's see. There's the yen right there. Dollar yen. You see it's been gaining against the dollar today. Yesterday it was trying and then failed. By the end of the day they took it up. And it's actually flirting with the sell today. Right there. We might even get a sell out of it. Now the weekly has been, so strong. There's the zero line. Let's move that up right to there. And that's been in that weekly buy now since April. So, interesting action there. And you know what? Let's see. So, it's the yen is actually gaining against the dollar. Now, everybody else is what? Losing? No, let's see. British pound is gaining against the dollar too. And the euro is gaining against the dollar. All right, so they're all gaining against the dollar right now. So as much as the dollar, but it's still in a daily sell in the euro. But as much as the interest rates may be moving up in the States, possibly. Hard to say. You know, the 10-year, was it? They were quoting, after all that came out, they were quoting the 2-year. Then they were quoting the 30-year. And the 30-year is still under 4%. So, I guess they're moving it up, because I know we've been in a daily sell. Let's go over to the bond market for a second. Let's see what the bond vigilantes are up to today. And there it is there, the September Ooh, smack-a-doodle. They took out the low here back of May's low. Let's squeeze that a little bit more. Ooh, so now they're going after, what is that? Late February, first days of March lows. That's what they're going after now. Look at that. Ooh, let's see what the yield is. The bond vigilantes might be out there having some fun. Let's see, right there and right there, and here we go. There comes the bonds. And there is the 30-year right there. Oop, there's the 30-year. And it's trading at 3.9. Ah, that's why they were saying it's still under 4. I thought it was curious that they said it the way they did. It's at 3.99. And then everybody else is over the 4s now. And you can see now the 2-year is still at 5. And we looked at this yesterday. You know, and then now 6 months out, that's at 5.5. So they've got those 2-quarter increases priced into the 6 month. So in other words, there's probably going to be every 6 weeks they make an announcement. So they've got 4 more weeks to go, I guess it is. And so 4 more weeks, and 5 times 6 is 30, right? And that's like a little more than half a year. Take off 2, so that's 20. That's 28. So, you know, they're giving what is that? They're basically pricing it 5 months out. You know, that they will figure out how to raise rates somewhere along the line. Maybe they'll skip again. Look, the problem I always have with them is that it's always way too political what they do. You know, that's the problem with the Fed. It's all political. So in other words, when they should have raised rates for 1.25 years, instead they said it was transitory. Don't worry. And when we went from 1.25, 1.25 to 10.25, they still said, don't worry about it. And now it's down to 5. They're like, don't worry about it. You know, so they keep, you starve. You keep on starving. They keep on starving you, and they keep on saying, don't worry about it. We will grow food. You'll get fed. And it's like, when? 6-7 months from now. You'll be dead by then. So that's what the problem is. All right. So back to the currencies, and we're looking at, when I do that, you really have to be impressed that the stock market is not really getting like crushed. It's just going down. It's not nothing like, nothing super major. What else can we say about all that? I guess, what else? Well, from there, I guess that's let me get the yen up on the J4X to start off with before I start mumbling about something else. There it is. So we're getting a little red there too. 60 versus 53. Yeah, so it's it's going below the 0 lines over here, and we're trying to do the same thing there. Which is, look at the move. Why not? Somebody take some profits. This is what a consolidation looks like right there. And they go down a little bit, they go up, they go down, they go up and down, and finally they dig in again and they go do another move. And that's pretty much the name of the action there. So. Trying to think what else. I guess that's about it. Let's go over to Turkish lira. let's see what the Turkish lira is up to. Yeah, I think it went into the sell yesterday. That was kind of cool. There it is right there. Woo. It's in the sell now for a couple of days, actually. But it won't go down. They didn't make an all-time high now for 3 days now, so that's not too bad. This thing finds ways to go to all-time highs like every couple of days, it seems like. Right now it's doing another digestion. Someone's doing digestion. You can see, look at the weekly. It is so firm, so firm, way up. Look at the explosion out, like what's interesting is you see it here. It's flatlining, right? And you see here, and then it blows again like a whale. Another 5 handles. Wow. What an interesting product to watch over the last 10 years. We've really learned a lot, and it's been interesting. Unfortunately, it's been very expensive for the people of Turkey, but for us traders who like to understand markets, it's been very interesting to see. And we've seen pretty much every smart strategy that can be used to try to help it. They've been used, and they've gone. And the product has gone from 1 to 28.3 now. So, and as the high now is 29. Is it over 29? The high now is 29, almost 29, 29.29. So we've seen this product go from 1 to 29, over this time period. And they've used every trick in the book to try to stop it from, taking off like this. And they've not been too successful. And it's kind of interesting to watch it, and it always comes down to the same thing. You can flood things with money, but if you don't change policies, then in the end result, the investors don't trust it after a while. That's what the problem is. They don't trust it. All right, from there we go over to the Mexican peso, the king brick. And you can see right there, it's trying to get into a buy. We're getting a volatility signal, nothing major. You see the weekly sell has been going on now for months upon months, all the way since the beginning of April, even at the end of March to some extent. And let's put the king peso up on J4X right there. See the same thing. What a wonderful move. Look at that. It's been just a solid, great move. The currency itself, when you really look at it, it's not that 21 to 17. That's something, I mean, that means it's gaining against the dollar. There were 21 pesos to the dollar. Now there's only 17 of them. That means that obviously Mexico is becoming more valuable and the dollar is becoming less valuable, and that's been kind of impressive. From there, we in some ways. I was thinking about when we talked about it before. I wanted to take the peso and try to match it up to say a commodity, because when they say that the BRICS, they're going to have like maybe Saudi Arabia or Mexico in it. Both of them are oil nations. Saudi Arabia is like 10 million barrels a day. Mexico is like 5 million barrels a day or 4.5 million, something like that. Depends on what they're doing. And so that's a lot of oil a day, So Mexico is an oil nation. And, it's interesting to see those products, how currency pairs match up to the oil itself. So because we do that with the Canadian dollar, we take a look at that. In this case here, we jump first to, and this way we'll lead the rest of the way into the commodities. So what we'll do is we'll look at the South African rand. You see the rand, when the rand is moving up, usually gold is going down. And that's always an important factor. And then let me see where we at from there. Let's put up, we'll put it up on J4X. And there is the ZAR, the South African rand. That's the daily. What a nice big spike. This unfortunate was very, when it's going up like that, it's losing against the dollar. And this big drop here was a big gain against the dollar. And now they're slowly trying to do that bounce back up. Now, when we look at gold over here on Chicago Quant, right there. You can see gold has been going down in value kind of over that same time period. There is May. All right. And here is the, I guess this is May all in here. And then it started to back off out of nowhere. Finally, it was going wrong for like a week still. You could see it tried to roll over when it topped out in the 20, heading for the, at the high was $2,000 in dollars, 2,087. It was heading for 21. That was the beginning of May. Okay, let's widen this a little bit more like that. And so there's May. And so normally this should go down, but it still had those political problems that were going on. So here, it tries it again here. It still doesn't succeed. And gold is going down, 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 down. And Rand is still going up, 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 up. And you can see it tries to stop. Then finally, at the end of May, you see it finally, right here, joins in with gold when gold breaks the 2,000 area. Seems like the sellers come out and it drives it down into the, the 19, it goes down $100, over this time period of slide. And then you can see it's kind of based itself in here. And when it based itself in here, you can see they started buying dollars again and selling Rand. So they're still not comfortable with gold gaining in value. They think gold is going to be stuck and down. That's what it's trying to tell us. So let me think now. So that's the way we look at the South African Rand. And what we do is we look at, from there we go over to the oil side of it, and we go to the Canadian. And there's crude oil right there. Crude oil has been going up in value, so we would assume when we look at, over on J4X, we go to Canada, it should be going down, not up. In other words, it's been going up, losing against the dollar. It should be gaining against the dollar like this. And that's we blamed inflation and a few other things at one point, but overall, they have not. You can see here, this is the last 2 months right there. And so when oil went down, the Canadian should be going up, and it really has had a hard time doing that. There's the beginning of May, and here's the beginning of May. So oil's been really sideways overall. You can see that big, long sideways, trading a small range. And you can see this nice gain. We were trying to figure out more of anything else. In June, we were thinking, what does that mean? And it was pretty much the fact that they were thinking that they were going to start raising rates, and they have. Now, that's why they make those moves. Sometimes they actually do fundamentals, and they actually follow them. More than a minute or two. They actually follow them for days and weeks. Once in a while that happens, and that's what happened there. All right, now from there, let's just what we're going to do. We're going to jump over to where's it at? Right there. Let's go over to silver. Right there. There's silver trying to lift up. It's trying to get going. It's in a buy. Let's look at silver over here. It's lifting up. It's in a buy, flirting a little bit today. A little volatility signal. Stuck in the weekly sell from this sell-off. I guess we'll just have to wait. They don't want to take it up. And then again, we look at the gold. Same situation. Been in a weekly sell for a long while, since the 2050 area. And, went down, dropped about $150. Overall, the buyers are just not that interested right now. Copper. This is basically the Chinese index in a sense. When copper is moving down, obviously China is not having a good economy. And it has fallen from the 430s down to the 360. So they're having their problems there economically. We know that. I guess that's why Yellen is there. She's got to bring a suitcase of money to help them. That's pretty much the answer to it all. And what else we got to say about any of that? I guess that's about it. Yes. Let's show you platinum. Right there. Platinum trying to sell off again after a couple days in a buy. And let me see. I just want to save that one in case I accidentally don't remember to. which I never do, but just for the heck of it. And then we go over to the, you see the crude oil right there. It's trying to lift up. We're at 71.68. The back month, that's the delivery month. The back month is at 71.53. So it's about 15 cents minus. That means that short term, they're more interested in owning oil than not. And then we look at nat gas right there, which has been in a weekly buy for a couple weeks since the 220 something area, 230 area, something like that. And we have traded as high as almost $3. It's 290 something high. And now we're kind of hovering around in the 265 area. Was trying to get into the sell there yesterday. Let's see what they do over the next couple of days. And that's pretty much the energy side of it all. So we're out of here. U.S. markets open up in 3.5 minutes. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.